to be looking at why continuation setups are the best. Why are they the best, right? Because a lot of times, many traders want to catch reversals, like to catch reversals, want to catch the trend when it's reversing, and that's usually not the best choice, really. Okay, so continuation setups. So the favorite and the best continuation setup, right? The best continuation setup, sorry. The best continuation setup is breakout, pullback, and entry. This is the best continuation setup. Okay. So how does BPE work? So BPE means let me write that out someone. It's breakout, pullback, entry. The idea behind BPE is to always remember that on any particular time frame where you get two-time breakouts, I'm explaining BPE now. So in any particular time frame where you get two-time breakouts, we have something like this: breakout one, breakout two. So price took this and then took this out. Okay, it took this and then took this out. Now, for BPE, you must also consider the week of those areas. You must consider if price took the week or not. And the areas you are considering for your breakout, pullback, and entry, they are from the opposing trend. Okay. What do I mean by they are from the opposing trend? It means that you're looking at this guy as a breakout, this guy as your second breakout, right? So you're not considering this as a breakout. This is not the opposing trend. We were buying before, so price is trying to initiate sales. So the breakout we would look for will be breakout on the buy side, right? So why is that important? It's important because in a bullish trend, these extremes are where you expect price to come, bounce, and then buy, right? These extremes are where you expect price to come, tap, and buy. You expect price to come here, tap, and buy. Why? Because it's a bullish trend. But when we talk about BPE, what we are saying is that we have broken all the areas where buys are supposed to happen, right? We've broken them out. Okay, I'm trying to adjust this thing. Okay, so for BPE, we're saying, okay, you're supposed to buy here, but no, we broke it. Supposed to buy here again, no, we broke it. Okay, so we have two-time breakout on the buy side. So price would retrace and drop. For a bullish scenario, you have a bearish trend coming on, blah, 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 blah. So first breakout, second breakout, pullback, entry. Now, this is the first breakout. You must remember that it is from the opposing side. And for what it's worth, it's also good. It's perfect if you consider the week, okay? If you consider the week for during this breakout, it's the best actually, if you consider the week. And right here, you have your MSU, right? Take the I, take the low. I just brought this one into it just to make it fun. But the idea is that price has broken the first place where we could have sold from, broken the next place where we could have sold from, right? Why did I draw it this way? This is an MSU, right? And an MSU is a controlling area. So normally you would have been expecting that the price would sell from anywhere around here, right? But price broke this one, broke this two. When price retraces, this is the pullback. So breakout, breakout. This is the pullback. When price pulls back, we initiate our entry and then boom. So let's see examples of BPE. Now the BPE is based on H4, H1. Okay, it's based on H4 and H1 charts. So let's use H4 for example. What happened last week? So we had breakout one, right? The week also took it out actually. Second breakout. So break, we broke. Okay. Now we had retracement and then we start to fly. Okay. This area are where we should have sold from, right? See, when price got to this area, see that. Let's zoom in on the details. Okay, see, but when price got to this guy for the first time, what happened? We sold. We sold for a while, right? The same thing for this guy. When price got to this guy, what happened? See, we sold a little sell. I think I even took this sell. I took this sell. We sold to this place like almost 100 pips, right? Did someone say something? We sold to this place almost 100 pips, okay? So the interesting thing is these areas are areas we should have sold from, right? But no, price did not allow that sell. Price broke it, telling us that sellers are no longer in control. Buyers are now in control. That's what it's telling us. Okay. The sellers are no longer in control. The buyers are now in control. So price broke out, retrace, entry. Okay. So two-time breakout, like I said, it is based on which time frame? H4 and H1. When you get a two-time breakout on H4 on H1, you are good to go. Very, very good to go, honestly. Okay. So another example. So let's see more examples. Here's an example here. So first breakout, second breakout. Okay. First breakout, second breakout. In fact, we had a third breakout, but that is not the surprise goes, joggers around, came back, right? Use the classic SNR, and then boom. Did that many pips on the classic SNR? Let's see. 800 pips. Guys, 800 pips. Just by using BPE on H4 and H1. Okay. So let's see another example. All right, here's another example here. So first breakout, we broke. Second, this engulfing. One of the reasons why you know those good areas where price wanted to sell from is that when price gets to them, you see a slight sharp. See, when price got to this SNR level now, you see we sold. You see that? We sold. When price got to this one, so you see we sold. So eventually breakout. So immediately price breaks out. See, we have breakout, pull back. This is your entry. Okay. I've entered here and then enjoyed the buy. Two-time breakouts, H4 and H1. It's best if you can stay with H4. But if you for intraday, H1 is good. For good trading, you can try H4 is better. Okay. Now see first breakout. That's your first breakout, second breakout. Okay. First breakout, second breakout. So you see drop, price pulls back, right? you enter, and then boom. How many pips? 290 pips, solid pips, 290 solid pips. Okay. So continuation setups at best, guys. They are the best. Yes, for continuation setup, you probably have missed all this trade, right? Probably have missed this. In fact, the first retreatment, right? The first retreatment into this area was this candle, not even this one. Okay, so this was actually the first retracement. We broke out this singular candle, took this out, retraced, and then boom. See, 290 pips. So you could have even benefited from this. So the only thing you would have missed is this candle. Okay, these things are so good. See, don't miss out on BPE. BPE is the best, guys. Is the best, and you only look for it on H4 and sometimes H1. Okay, let's see another example. Last example. Okay, let's go to H1 for last example. You ready? Are you guys ready? First breakout right here. Okay. First broke. Second breakout right here. Two-time breakout, right? So you see price retraced, entry, shut down, shut down. See that? Shut down. Okay. So again, see price break, first breakout, second breakout. Okay. What do you see again? Pull back, shut down. So the first trade, first break, second break, entry, right? When this starts to move, you see first break, second break, retrace, entry. Okay. Okay. So on H1, it's your first break, second break, pull back, your entry. Okay. First break, second break, pull back, entry. All right. Let's take one more example. Okay. So I think that suffices for BPE. Now the next question, if you're going to be trading BPE, the next question is where is price likely to use when it pulls back? Okay. Where is price likely to use when it pulls back? All right. And from common practice of what I tell you guys, that one of the interesting ways to find, okay, so when is for common practice, one of the interesting ways to find a precise entry, right, is to go one time frame above to look for an SNR level that you consider a valid SNR level. So you go one time frame above to look for valid SNR levels to trade from. If you don't see one time frame above, then you go two time frame above. Okay. And after you've done that, you then do your MTF. So for example, this was an H4 level. So you're just going to see all the ones I marked earlier and see where we could have entered. Okay, this was an H4 level. We drew this on H4, breakout, pullback. So the pullback, how do we enter? Let's see. If there's anything on the daily that would enter it was. So there's nothing on the, oh, just something on the daily. Okay, so this is the breakout candle. So on the daily, we have this broken gap level. Sorry, guys. In daily, you have this broken gap level, trying to make it precise. So price tapped, did it tap? Almost right. So we have that broken gap level, which gives us an idea of where price is likely going to come to. And then price comes, blah, blah, blah. It's the level. So I'm trying to adjust it. Price comes, it's our level, and then we start to buy, okay? It's the level and then start to buy. Too precise, right? Too precise. The second example, this example, okay? So we have entered here. I think now I have to be using the replay button. So we have to go back too long. Okay. Now on the daily, you go on, remember you go one time frame, right? On the daily, where's your entry? Classic SNR level, right? Then you now go to H4 for MTF. So this is your entry. Okay. You go one time frame above to find an important SNR level to use. And then you drop back to that time frame for MTF. Okay. So this is your entry. So next example, this example. Okay. So where will I go to now, guys? Can someone talk? Can someone unmute their mic so I know you guys are following? This is H4. This is where I saw my two-time breakout. First breakout, second breakout. Okay. First breakout, second breakout. So what time frame will I go to get at least an area that price will likely use right now?
Daily.
Sorry?
Daily.
Daily, good, very good. So I'm going to go to the daily. That's very good. So if I do the daily, check this out. This level. I think it's this level. So let me go back so I can. Okay. Yes. So on the daily, what would I have chosen as my SNR level? So one of the format spaces I would have chosen is this guy here, this gap level, right? For pricing tablets, okay? Pricing tab that gap level, right? Rather price used this level. Of course, we have an hidden engulfing. I'm going to explain that next. Of course, we have an hidden engulfing. So when I explain hidden engulfing, we'll come back to this particular entry. Okay, so the next one, you see, what time frame do I go to? I go to the daily. I'm trying to take it back so I don't make. Okay, so to daily, huge drop, right? Right. So if I'm going to enter this trade, this will be my entry zone, right? Back to the H4. Should actually mark from the engulfing to the engulfing. Oh, I think this is now a good opportunity to explain what I'd explained before. So this is a perfect daily engulfing, right? And to get a perfect entry, remember this, we were coming from the H4. We'll go one time frame higher to find SNR level. And one time frame higher, we found a perfect engulfing. Okay, there's a perfect engulfing. So to refine our entry, we can use the second movement inside this engulfing. Okay, I explained second movement before, so I'll explain it again, or I'll explain it better. Now, if you have an engulfing, a very big engulfing on the daily time frame, like this one, the daily time frame, you can drop down to the H4, just one time frame below. H4 charts, max two time frame below if you don't see second movement on one time frame below. So you can drop down to the H4 charts to find your second movement, because usually for engulfings, this is what you see. See something like this, breakout. This is the second movement. This is the apex, or this is the highest, the second movement, and then the drop. So price would likely use the second movement and start dropping. Why? Because this second movement has high importance. Remember when I explained the last time, I told you most times the second movement has completely mitigated the first one because you are likely going to have an engulfing at this edge. I'll show you, and I show you example to make more sense. Likely going to have an engulfing here, a on the smaller time frame. Okay, likely going to have an engulfing here, and then you have your second movement. So engulfing, second movement, right? So this is the engulfing, this is the second movement. So the second movement will most times have mitigated the engulfing. So when price comes back for a pullback, it's not going to use the engulfing anymore. It's going to use the engulfing on the second movement and then drops. So what did I say is second movement? Second movement is when you have an engulfing or an SNR level. It could be a gap level, it could be an SNR level on, let's say, the daily. Okay, to get my second movement, I have to drop down to the H4 to find it. All right, so let me write that out so you guys can see it. Okay, so for second movement, best for entries. Second movement, best for entries. Okay, mm, if on daily, go to H4 to find second, no second movement. Pardon my English, guys. And H1. Okay, if on H4, go to H1 for second movement. If there's no second movement, go to M30. Okay, so the idea is to go one time frame lower. So where is the second? These are daily. But let me retrace back a bit. So the first one is this is a breakout, right? Breakout, entry. Okay, so a lot of guys would have dropped, right? So we'll come to the daily to find our entry, and then we saw that, oh, we have this huge engulfing. So on this huge engulfing, I want to find second movement that is perfect for my entry. I come to the H4. This is the first engulfing. This is the second engulfing, right? The first movement, second. So you see that the second engulfing has already mitigated, has already tapped into the first one. So this one is no longer fresh. So when price comes back, this is where price is likely going to use. Okay? Why? This is the second movement. I know you guys have seen this already, so I'll just make it fast because we saw this example before. You see price taps and then starts to drop. Okay? Second movement. Second movement owns the momentum. Okay? So the same thing for the previous one. Sorry, guys. Let's see. The same thing for this one that I said I was going to explain. So let's see what happened there. So we pause. So this big guy, this from year to year, that's where we have our hidden engulfing, right? We have our hidden engulfing from here, from this point to this point. So I'm going to go to the H4 to find the second movement. Okay. So where's the first? This is the first movement, right? First movement, second movement, still inside this big daily box. Okay, this was the first movement. Has it been mitigated? Yes. So when price comes back, will I want price to come back to this place? No. I'll be looking at price to continue from this engulfing. Okay, so price comes, taps, and then goes. Okay, why? Second movement. All right, another example that we marked before. So this was, we marked this from H1, I think. So let's go to H1. Sorry, guys. Let me play button. All right. So first breakout, second breakout, retrace. How do I know this is going to be what price we use? So I can go to H4 charts to look for something interesting. So what do I find in the chart? I see this classic SNR level, right? So on the classic SNR level, now go back to H1 to find my second movement. Okay. The price taps beautifully. As earlier tapped this guy. So this good guy, had earlier tapped this guy. So this is the first movement. The second movement, price taps and then starts to drop. Okay. Second example, this example, we had breakout, breakout, retrace. So in this example, what time frame? Still H4, guys. So go to H4. So on the H4, what scenario levels will I be considering? Okay. This would be a very good one to consider, right? To make it more precise, I can go to the daily to make it more precise so I don't confuse myself. Okay, so on the daily, nothing much, nothing extraordinary. So back to the H4. So this is a good level to consider. And then this is a broken gap level, right? So my broken gap level, I can go to H1. So on the H1, do I get to see a second movement? Yes, of course, I get to see a second movement. This candle already these guys have already mitigated. So this one is no longer fresh. It has been used. This new engulfing also no longer fresh. It has been used. So the only valid engulfing in this zone is this guy. This guy. This is the only valid engulfing in the zone. And when price comes back, where did he use? It just taps and drops. Okay. Taps and drops. So back to H1. Oh, we're still in H1. Did we mark any other example? Let me see. Any other example? I think that was the last example. It should still be one more. Okay. So guys, that's basically what we have for second movement. Okay, I knew there should be one more example. Right, so last example, this level, right? So on this level, first breakout, second breakout. So where will I know the entry? I go to the H4 charts. I open the right charts. On the H4 charts, there's actually nothing conclusive. The only thing I can assume that price is going to use on this H4 chart is this HNS level, right? The HNS level. So let's see if I can get an MTF for the HNS. So for the HNS, where is the closest H1 level to the HNS? Closest is this, right? This new HNS level. All on the same. Not so straightforward without cutting this entry using that H4. So on the H1, let me just explain this. On the H1, we have this hidden, these gaps that got broken. And smart money traders or algo traders, they usually call this kind of candle an imbalance. Okay, they call this kind of candle an imbalance. So let's see. We have this candle as a huge week. We're going to go to M30 to find the second movement within that candle. Okay, so the candle is so long, right? So we have the first movement, price goes, mitigates this other guy, and then drops. This guy is unmitigated. So fresh, right? This guy is so fresh. Okay, so when price breaks out, price comes back to that level. Second movement, guys. Second movement are super good. So this is the first movement, all mitigated. the only fresh level remaining. Price stops, gives an MSU, take the high, take the low, candle MSU, right? Single candle MSU. Take the high, take the low, and then we start to down. Okay. And again, price comes, taps this level. So I'm on the M30. This is an M30 signal level. Where will I find my second movement? For my second movement on the M15. Okay, so on the M15, do I get a second movement? Nah, nothing. I just get the same level. So that validates that area, right? I get the same level and that validates the area. All right, guys, I think that would be all for BPE. So breakout, pullback, and entry. Big weapon, guys. Big weapons in trading. You look for it on H4 charts. You look for it on H1 charts. Yeah, it is. It is super powerful. And then don't forget your second movement for entries, okay? So you go one time frame above to find big SNR levels to use, and then you enter, okay? So I want to talk about one more thing. Apart from the BPE, you can also use the EFG setup, right? The EFG can be a three candle type. I hope you guys have seen the video. It can be three candle type, or it can be the extended type. So you can also use that to as your continuation setup. Okay. Our MSU, favorite MSU, is also a good continuation setup. And the idea behind all this is to be able to always remember that people that catch reversals is good. It's good to catch reversals, especially if you have conference. For example, if you have this conference on the chart, I don't see a reason why, if you're on the chart when this happened, I don't see a reason why you should not take this trade. Now, this is type 1 reversal trend line coinciding with a gap level, H4 gap level, right? So if you have this H4 gap level, you're not sure where to enter, you draw your trend line and then you enter just after price crosses and taps the SNR level. You load your entry. Okay. Is it a fresh level? Yes, super fresh. Super fresh. Yes. Super fresh. Let's see if there's a second movement. This level. This guy did not mitigate it properly. So here you go. Imagine how low your stop is going to be, guys. You enter here in H1, you stop below the second movement engulfing candle. Just at 7 pips, and then you have vola, you have magic over 1,000 pips. The enemy of my own enemy in trading is time. I really wish I have time to like sit on the charts and take crazy setups, crazy trades. But that time will come very soon when I finish this. All right. So I hope this has been simplified enough. So this is PBE, and this is proof that continuation setups are the best. Okay. So for continuation setup, you would have entered here where you are super sure, low risk. There's no high risk for continuation setup. Usually low risk. So you enter here, low risk. And rather than 700 pips, 900 pips, you would have taken 700 easy. Okay. Note that I'm starting to take your mind away from 20 pips, 10 pips now. Okay. Starting to put your mind on big setups. The essence of the initial 20 pips, 10 pips is to be able to make you see that your goal is to make money. But can you also catch long, wide pips? Yes, you can. And that is why I'm explaining this again. So H4, H1, look for a two-time breakout. If you see, then good for you. Okay, good for you. Right? Any other question? Okay. I think that will be all for now. For today, that'll be all for today. And for the trend lines, I hope you guys have seen the videos. I hope you guys understand. I dropped a 10 minutes video to explain better So on Tuesday, we are going to do a trend line drill to know how much you guys understand. All right, guys. Thanks for joining. Have a great day.